Did you sell too early? Today we're going to break that down for you, give some strategies that may be playing out in the market right in front of our face. So stick around for it. Let's get into the show. I do want to thank our sponsor, and that's Coinbase. All of this activity over the weekend and now early into this week, now is the time to get into crypto. It is your opportunity to possibly get some great deals. Join Coinbase.com. You guys can get over there, whether you're a business or an individual. You can set up an account over there, get it started, and even get into their credit card. You can actually now apply for the credit card, get early access to getting a card that is available up to 4% Bitcoin back on every purchase. I can tell you guys this works. Check it out. And of course, let me know what you guys think on Coinbase. Just drop some comments. Let's go into the show today because I want to get into some of the key catalysts that, of course, has caused a lot of this to happen this week. And it's not necessarily the number one reason. It is the thing that kind of adds to what's happening from a manipulation standpoint. More in point is China now confirming their working level talks with the U.S. regarding tariffs and, of course, export controls. So this is number 9. It's this little metric that the Kobeisi letter put out, and I think it's pretty accurate. Let me show it to you. And here we are. If you guys missed this, we kind of break it down. We'll start from 1, but I'll go to number 9 real quick. Trump put out a cryptic post talking about tariffs coming. Trump announces a big tariff, 50% or more, and it crashes the markets. Exactly what happened over the weekend. Then the dip buyers step in, do a head fake, leads to fresh lows, which is what we saw. After the market closed on Friday, perfect timing. Trump says, hey, maybe we're going to really apply this because of all this, precious metals that we're dealing with. And then he continues to back off over the weekend. And well, we are now at number 9, which over the next 2 to 4 weeks, we could see various members of the Trump administration teasing a trade deal with China. If that happens, then all this is pretty much a playbook that you guys can follow. So reference back to it when we told you so kind of thing. The other thing that's happening, if you look at tariff on China, everybody is kind of in the same position, saying it's taco time. It's Taco Tuesday here today. And that's only 16% opportunity here that says we will see a tariff on China. Everybody thinks this is going to get worked out. And of course, that's why we're seeing the market also play into this. Other news that's heading into the market is MetaMask doing a major partnership opportunity here with, of course, Polymarket. This is going to change things dramatically on order books and how this plays into where we're going to see the strength of these prediction markets play into. So Polymarket, of course, looking for distribution. MetaMask is going to be one of the biggest out there in terms of the largest wallets, in terms of hot wallets. So interesting move there by Joseph Lubin with that. Other things that, of course, is this news right here where Binance, of course, said we're going to distribute $300 million to users that were liquidated during last week's market crash. I know that this may seem like a small amount. It is a small amount in comparison to the amount of money that was lost in liquidations. Many people would look at that and say, well, this could re-ingest back into the market. But if you look at the shots that were fired across the bow between Binance and Hyperliquid, I'll show you this in a second. But this was the statement from Binance. Eligible affected users will receive token vouchers worth $4,000 to $6,000, while institutions hit the hardest by the crash will get a $100 million low interest loan. So if you're an institution, you could get an low interest loan for up to $100 million. I don't know that sounds like a great deal, but I think this is something that Binance is trying to do to kind of protect the situation. You had a Hyperliquid Daily kind of calling them out. Token prices rebounded as if untouched. We all saw that. Yet thousands of traders' portfolios absolutely vanished forever. Look at BNB. How can anyone claim Binance played no role in crypto's largest liquidation ever? And of course, them stating this is manipulation and it reeks. And remember, this is where Binance flipped XRP over this deal. So just be thinking about that, guys. All right, so let's jump over to this other tweet right here, Hyperliquid Daily. Again, this is where Jeff Yang, of course, kind of hits on this. Hyperliquid, fully on-chain liquidations cannot be compared with underreported SEX liquidations. And if you look at what he's talking about with centralized exchanges, publicly document that they dramatically underreport user liquidations. For example, Binance, even if there are thousands of liquidation orders in the same second, only one is reported because liquidations happen in bursts. And this is easily done because 100x underreporting under some conditions could happen. So this could be a lot bigger than everybody really anticipated. Of course, what we saw in general, I think, is the biggest issue. And I'm still hearing horror stories about these issues with Binance in terms of not being able to get into positions. Here, of course, CZ fired back across the bow. Some people ask why BNB is so strong. Well, they're definitely strong now. They're number 3 token. While others tried to ignore, hide, shift blame, or attack competitors, the BNB chain ecosystems, Binance, Venus, etc., went out with hundreds of millions of their own pockets to protect users. I haven't seen hundreds of millions. I'd like to see an audit of that. So if Binance is willing to actually publish that where it went, not just framework of where it went, that would be helpful, I think, to the industry and would be very transparent. Now, if you look at the market, fear and greed right now on traditional finance, this is the lowest it's been in a very, very long time. If you just look a week ago, we were at 50, which was neutral. A month ago, holding a 54, kind of edging into greed. And then even a year ago, holding a greed. But we have not seen these kind of lows in the market in quite some time. I want to go to a clip real quick because this will get into why the market is nervous. Take a look.
This happens a lot.
So this is just a rest in the selling, but it will continue?
Interesting, guys, folks, in that this isn't just a blip in terms of, hey, just kidding. There's no question we saw from the market's reaction two things. One is that this is a nervous market. We had seen volatility creeping up towards the end of the week. Even without that move, it was a choppy week at best. We've kind of run out of gas, but the dynamics of getting a lot of macro, a lot of headlines without a lot of bottom-up substance. That's the great thing about earnings season, which is coming down the pike here. But I don't think there's any question. The reaction we had on Friday tells you that this is a market that is nervous. It also tells you, and I think we said this on Fridays, I'm not sure there aren't a lot of people that want to buy dips out there.
All right, so what he hit on there at the end, which I thought was interesting, is that he didn't think there was a lot of people out there willing to buy the dips. And of course, we are seeing institutions doing that. We saw Bitcoin and ETH all getting purchased up. And I think we've continued to see that. I put out a poll yesterday and your current crypto market sentiment, and then I put in Bitcoin, ETH, XRP, Solana, and it's bullish right now at 85%, 85.7%, over almost 1,200 votes. And we still got a few hours left on this poll. That one surprised me because I felt like we would be a little bit more skittish, and this was telling me that there was a lot of people, even before this dip, that everybody was all in. It also tells me that it's almost like the point of no return. Here we are in crypto. So this gets very cautious. The other thing that hit that you have to kind of consider is what Chair Powell just put out today in his meeting that says economic growth before the government shutdown may be better than expected. So that might be a light at the end of the tunnel because it could loosen up a little bit of liquidity in the market in terms of traditional finance. People might look at this and say, okay, let's calm the markets down, stop the selling, and try to figure out where we go from here. That is what we're looking at. And of course, some people looking at Bitcoin and gold as being the option. The correlation, though, is increasing. A couple of points to look at. Bitcoin gold correlation very high right now if you look at it on the charts. And the other thing is this is because capital appreciation potential has outweighed its ease of transfer for payments. This is another big factor that looks at where value of gold and Bitcoin kind of come together, which is intriguing how all this plays together. Institutions are now increasingly embracing the debasement trade, which is what we've talked about here a lot on the channel, is dollar debasement. And we're following along very closely on that because I think it's just going to do nothing but up from there. The other thing that plays into this, which is interesting from the AI side of things, which leads most of the traditional finance sector in terms of stocks, 54% of investors now say we're in an AI bubble. And this is B of A's survey showing 54% on the AI bubble and 60% saying stocks are overvalued. So that could be some of the pullback that many analysts continue to push on right now around is this market too heated? Are we going to see an assessment or a drop back into the market going forward? Now, Larry Fink was asked this question. Are we in a bubble? Here was his answer. Take a look.
But are we inferring a bubble means a bad thing? But there is certainly a skyrocketing amount of capital that's being put to work. If you think about it, investing in AI does not just mean investing in GPUs and chips. It means investing in HVAC and investing in power grids and power supplies. It means employing a lot of people, too, to build this out. So we are talking $1.5 trillion. I don't believe this is a bubble, but I believe this is capital that in most cases is going to be well spent.
All right, so he's talking about the $1.5 trillion coming out from JP Morgan there. And to his point is they're going to expand across a variety of different infrastructure side of things. But in general, if you look at where he's positioned, BlackRock's Q3 earnings smashed forecasts. And this, of course, revenue surging 25%. This, of course, is iShares ETF demand #1. We're continuing to see that. Remember, these guys make money on volume. Volume has been absolutely crazy, and I think we are ready for another big push on ETF volume as we start to move into this latter part of the year. Other things you got to look at, they also bought another 525 in Bitcoin worth 60 million. I know that's not a lot, but they are buying in this 111 range right now where we are today at recording on Bitcoin. I also want to go over to the next clip here because this will get into a little bit more around what Larry thinks about the whole idea of tokenization and where it might be going. Take a look.
Crypto, our digital asset platform, our private markets platform, our investment technology grew as fast as they have in many, many quarters now. And then, just across the board, ETFs, record quarter. I do believe we're just at the beginning of the tokenization of all assets, from real estate to equities, the bonds, across the board. There's $4.1 trillion of money sitting globally in digital wallets. A lot of that money is outside the United States. If we could tokenize a ETF, digitize that ETF, we could have investors who are just beginning to, invest in markets through, let's say, crypto. They're investing in it, but now we could get them into the more traditional long-term retirement products. So we look at that as the next wave of opportunity for BlackRock over the next tens of years.
All right, so you've got Larry really all in on tokenization and the capacity of creating momentum and velocity, which is how a lot of these markets blow up. It's how AI blew up. It's what we saw in the early stages of internet stocks. This might be that phase right now of us entering kind of this next era, and tokenization will lead the way. I want to go to one more clip here because this is Joe Moglia. He talks about betting against Larry, and this gets into a very intriguing scenario that I'll explain in a second. Take a look.
I mean, Larry's a pretty bright guy. He used to be a real traditional finance guy. Now he's a DeFi guy, and he's a Web3 guy, and he appreciates the future. The people that grew up in the Web3 world and the DeFi world really are on top of their game. But it's a lot of people in the traditional finance world that still tend to struggle with this a little bit. 5 years from now, there's not going to be a stock, there's not going to be an option, there's not going to be a mutual fund, ETF, anything that's not in effect tokenized. Stablecoins. 5 years ago, nobody heard about stablecoins. Today, we've got about $280 billion market, and Secretary Bessent had said that two years from now, we'll probably have a $2 trillion market. Ethereum is about 60% of that. Then when we start to look at the DATs, the digital asset treasuries, when you think about the future and you think what's going on, to me, this is still the early stages. It's kind of like Ethereum in an equity wrapper. It's not just the Ethereum by itself. It's an Ethereum with an equity wrapper.
All right, so his explanation is interesting here because remember, you got to remember who they're talking to in terms of investors. And by them packaging it in this way, I know you guys are probably thinking, this doesn't make any sense. We understand all this, Paul. We get this. But traditional investors don't. And I think they're starting to wake up to this. He also dropped stablecoins, the Ethereum as an equity wrapper. People understand that in terms of how equity works within stocks. This all plays into a potential growth around where tokenized securities can make their way into mainstream, and it's no longer just crypto investors that are doing this. So be on the lookout, guys. We could be in for some big rides. And he mentioned stable coins. And then here was Matt Siegel talking about Citi's assessment here, which raised stablecoin AUM forecast 20%, and I still think they're way under. But the point that they're talking about is a catalyst for ChatGPT's moment, which is crypto and blockchain, and the issuance volume, which they thought would now be going up to like 1.9. But if you look at the bullish case, that's a $4 trillion potential in terms of deposits. And this is just by 2030, guys. We're talking about 4 years away that we could see a $4 trillion. That's the size of the entire crypto market right now on a stablecoin market. So if this is even underserved by any chance, and if we do get a big pickup here in terms of market, there's a huge opportunity for this going forward. And this was a statement that I thought really kind of hit home. This is Andrew Kang talking about this. The inevitable perpification of global markets will undoubtedly lead to more volatility. What he's talking about here is the liquidation cascades in crypto markets applied to global equities is going to be a sight to behold. I want you to just step back for a second and think about it this way. You've got stocks in the same capacity that you can trade Solana. In other words, liquidity, open markets, multiple markets, worldwide, globally, 24/7, 365. Imagine if you had a liquidation event occur like what we saw over the weekend. Now, granted, it may not be the same kind of manipulators that are out there, but imagine if you had that, and you had it in something as solid as equities have been, because you have to wait the weekend to be able to trade the next Monday opening. And I think this changes the game dramatically. This is going to make so many people so much money when they get to this level. And I think Fink and a lot of these companies realize this and are just waiting for this to occur. So, guys, the number one way to beat all of this is simple: HODL. You know, if you're convicted in a stock or if you have conviction in a crypto, hold that and just look at the long-term position. That is the way you beat these kind of manipulation events. It's the only way to go. If you guys are not in the Diamond Circle, get in right now. It's a great place to beat that, issue around dollar debasement and these manipulation events that have been happening. I put an email every week. You guys can click the link down below. Follow me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.